Welcome to TradeTheMBA.com. This is John. This report is for the 25th, and as we get towards the end of June here, we've still been pretty much sideways the whole month. I mean, when you think about it, we started right over here, and we're exactly the same. We've had to push up, come back down. We still know we have the dip below the red line that needs to get filled back in, and we ended up with some nice basing here, but like I was saying with the S&P, this horrible shakeout, never a good sign, especially coming off such a strong one. That's like a breakdown, and what we're seeing is some of the geopolitical stuff going on, China, trade war things, how you balance out an inconsistent reopening and now resurgence of cases. And it really, this is something I pointed out from a macro standpoint. Without the Fed backstopping all of this, we would be down below 1,600 or lower, simply because you can't start economies this way. It just doesn't work. But they don't seem to grasp that. I know the hope was that if you could get people out doing things, that it wouldn't be a problem. I've always said the problem with this idea of just reporting testing is foolish. What you really want to report is hospitalization, availability. The virus is going to spread. This was always a PR mistake from the beginning, because at the end of the day, you can't stop a flu from spreading. You can help to mitigate it, and that was the whole point of social distancing and some of these other ideas. The lockdown was just too aggressive, except for the fact that if you were so far behind in getting your preparations done that you needed to get, proper gear and everything like that organized. But once you had all that, then it really becomes a question of hospitalization. And, it's interesting here because they use the hydroxychloroquine on a regular basis, and we literally have no issues now. Pretty much the squares and everything are filled, of course, only with locals because you really don't have any tourism in Italy. But it's interesting that all the military bases seem to have allowed their people to travel, because there are plenty of Americans from Naples, Vicenza, and Pisa that are service members who are able to travel through, and we see them a lot now in Florence because it's fantastically empty and so easy to get around. But from an ES standpoint, you can clearly see that rejection of green science. So this is going to be the Fed stepping in at various algo levels to keep the support going. Similar construct here developed on the NASDAQ as well, as its shakeout also softened out. So you have that going across, and of course at these levels it's not really much of a threat. However, it is a huge discount to what really should be the market value, closer to the 4,000 if the economy were moving, simply because of the money generation and the devaluation of currency. And there you have from the euro, still keeping it elevated, but you are seeing much more activity in the Eurozone, even though it's still nowhere comparable to what's still happening in the U.S. as far as startup situation. But still, the U.S. is flagging behind what their expectations were. And again, this is always an expectations game. And so that's pulled oil back just a little bit. And I wouldn't expect to go too much further because, again, you have the backstop as well, U.S. buying up any supply, and I imagine they also picked a floor value that they're just going to keep buying up at that. They're not going to just try and drive the price up relentlessly. They want a good deal as well. And gold is going to continue its march. There's going to be fits and starts of it, but inevitable. So where we left off, we were starting back here, and things were looking good as we got, we were above that 30.75 range, and the expectation would be that they would try and come back to the highs there. What was interesting is we ended up with the, rollover here. You didn't get any confirmation short until right about here, where we started to see an uplift of Azure, which lasted for a whole whopping bar or two, and then we got the spike above on the turn, and then that led to the breakdown that took us right to the 30.75 range. We had some nice dip downs that didn't get any orange below the white line, and you can see how that struggled. It was just unable to maintain it even with the rising shakeout. You had that dip well below the negative 13 here, and that's tough when it stays consistently that low. You tend to get small little bursts, but they don't seem to have enough, and then they let the 30.75 slide, and well, next one we have down to 30.50, and that's sure enough right where it gravitated to. And then they let it dip below that, which meant there it was at 13.13, but it started to build up here. That's when we finally started to see the orange dips below the white on the DSC, and that was the turnaround that let it build up just enough to reclaim some of this, and then you went right back to the same resistance point. So we're still continuing to see exactly the same lines being in place, so we know where they're concentrating their activities on. It's just a matter of going with it, and it's quite a volume for a day. I mean, that was pretty long for a 5K chart. So we started to get some more dramatic power mode 2 moves when you get those sigma events, and sure enough, they were outside deviation, and we literally had some pretty swift moves that became quite choppy, and then that leads us to what's going on in the after hours. Again, they did their nice dip, took it right to what we expected, the 30.13, and all the way back up to the 30.50, and that's how effective that plunge protection, I think, is what they refer to it as, and that just leaves us right caught in the middle of this range right there. So again, be looking for moves above the 30.50 to continue in that direction, and if it's unable to break through there, we're going right back down to that 30.13. So it's still clean action. It's just a little bit more volatile than some people expect, and that's just because you don't have the normal liquidity, as I would refer to it, which would be just a normal trying to back and forth play for small amounts. These are big moves that take place to force reversal change because you have too many people positioned one side, and that's when they can step in and do it. Particularly in the after hours, we get this a lot here because they're just able to move it so dramatically with little or no effort. I mean, look, this is not that many bars to move, literally 40 some points. That's just a lack of liquidity, and that's what they count on, and that gives them the opportunity to keep it at a comfortable level to where it looks like everything is going great, even though things aren't going so well at all. That's the long and the short of it. Of course, you throw in the other political elements of it, and you just got chaos. So it's just going to be a really volatile summer. No question about it. I don't know that we can remember a time where you have this many converging elements of, the economy and illness, politics, all of it combining to be one massive force. So I think we're just going to have to go with really what the algos give us, because that's where the money is, and you always follow the money. That's the rule. As always, though, I will keep updating charts or anything interesting. Trade well. We'll talk to you later.